Alrighty guys, welcome to our weekly outlook. Thank you guys for joining me today. I'm sure you guys see some big changes. We are now streaming on YouTube live. So we are no longer going to be using Zoom for these weekly outlooks, guys. As long as you are subscribed to my channel, you'll get a notification when I go live. You should get a push notification from YouTube. Just turn on the little bell, turn on notifications so you see when I go live. Other than that, I will still continue to post the YouTube live on all the different groups and social media, so that way you definitely don't miss this. But I think this is going to be a lot smoother, a lot more interactive, guys. There is a full chat room for you guys to talk about and ask questions and kind of build this community. So I see that we have, it looks like, if this isn't lagging, about 40 people in here right now, so this is great. Share it with your friends, guys. Share this, share my channel with your guys' friends, whatever. I'm trying to just pour as much value for free out there and help everybody out on these weekly outlooks and give you guys, at least my perspective. So as usual, if you guys are here for your first time, I want to welcome you guys. My name is David Schinkel. I'm the CEO and founder of Positive Traders, and I do these weekly outlooks just about every single Sunday for you. So I'm really excited to start doing these and really change the game up with these lives and, just change it up a lot. So as always, guys, my disclaimer is that this is just my opinion in the markets, okay? So please keep in mind that this is just one man's opinion, okay? I lose, I have losing days, I have losing weeks, I have losing months, okay? I'm not a perfect trader, but I am a profitable trader, and that's what's key at the end of the day. So just know that moving forward, that don't take my analysis for that it's gonna happen, okay? Be entering your own trades, your own analysis. The information I present here should only be used for informational, educational purposes only, and you should not consider any of this that I say as investment advice. It's just to kind of give you facts and kind of what's going on for the week, okay? In my opinion. So, without further ado, let's go ahead and get started. As always, let's go ahead and look at the economic calendar for the week. Now, if you're watching this, don't pay attention to, if you're watching this and you're in the West, if you're in the US or in Canada or wherever on the Western side of the world, keep in mind that I am in Thailand right now. I'm in Thailand for the next 2 months, just kind of refocusing myself and just, getting some stuff done out here. And this is not the same time zone as you. So make sure that if you're looking at the economic calendar, if you see where my cursor is in the top right, that you set the time change to where you guys are, because it's where I am, it's 8:08 in the morning. So all of these are going to represent the time where I am. So it's probably going to be much different than you are, maybe even different days, because I'm like a 12-hour time difference from the East Coast in the US. I'm 12 hours ahead. A couple things I want to talk about this week. We got a couple red folders for, or all throughout the week for the pounds specifically. Early on this week, we have some average earnings index 3 months over a year report, which is high impact. And then the day after, we have a year-over-year CPI report for the pound. So this week, you aren't actually going to see me trading the pound. I know someone in the chat, Jisa, you asked, what do I think about GU? I mean, I'll quickly look at it, but I'm really not going to give a bias on GU. I'm not interested in it. Trading it this week. I will talk about the pairs that I am interested in, though, and give you guys a ton of value from that perspective. Now, moving forward, later this week, we have a couple high impact news for the dollar. We have some CPI. If you're on the western part of the world, it's going to be Wednesday morning or my evening here in Thailand. And then Thursday as well, about the same time as on the following day, we have some core retail sales. And then a couple hours after that, we have the chairman, Jerome Powell, who is the head of the Federal Reserve, who is going to be speaking. So this should create some volatility this week. We can see that the forecast for the news for the dollar is for both pieces of news are expected to be very good for the dollar. Keep in mind that that's just a forecast. These are just expectations or estimates. It's not the true number. What really matters is the number that gets filled in here on the time that the news posts, okay? And then to finish off the week, we have Mario Draghi speaking, and then that's going to be it, okay? But this week isn't actually too bad, guys. If you actually notice, there's no big things. There's no NFP this week. There's no interest rate decisions this week. We don't have the elections like the midterm elections and the House elections that we had last week for the U.S. happening this week. So last week was a very, very volatile week, but we still were able to manage and bank a little bit of profit, a little bit over 1% profit in the premium group and everybody connected to my trade copier. So let's jump into things, guys, okay? Let's first talk about the dollar index, and let me give you my opinion of what I believe is going to happen, okay? The dollar, let's drop this down onto the daily for just a moment, okay? This is last week. Last week we saw a pretty big rally in the dollar index, okay? We saw it kind of consolidate early on in the week, and then it dropped a little bit. It dropped down, and that's actually what we were expecting. And I told you guys I was expecting a little bit of a pullback on the US dollar. Now, moving forward, we did see a rally from the dollar. We didn't see as much downside as I would have expected, which is fine. I wasn't trading the dollar. I was simply just watching, and this is the reason to kind of figure out the clear moves in the market. I also apologize, guys. I'm going to have to figure this out, how I can still mark up the charts, because my marker that I had when I would draw with that black line that you guys are used to seeing me draw with, that was in Zoom, and I'm not using Zoom. So I'm going to have to figure something out, guys, okay? But I just bear with me with this very first live stream. Sorry if it's a little shaky, but we're gonna get it figured out, okay? Now, if we look at the weekly perspective, the dollar is showing very strong signs of bullish momentum, right? If we scroll in and we look at this, this is the weekly candle. Remember, guys, everything I'm looking at on here is on the higher time frame. I'm not really looking at price on the 1 hour or even the 4 hour. I'm looking at everything on like the daily and the weekly. Last week's candle closed very bullish for the dollar index, okay? You have to understand that reading price action is very important. And when you see a wick that's more than the full size, that's larger than the full size of the body, right? If you measure this body, it is 45 points on the dollar index. And if you measure the wick on the bottom, almost double, right? 77 points, okay? So that's pretty big. That's a very big wick, and what that represents is it represents a large presence of sellers last week, which is what we can see on the daily when price was pushed down. But ultimately, and that's what really matters, is ultimately what happened in the way this weekly candle closed was very bullish, right? It's just showing very strong signs of bullish pressure. Even on last week's webinar, right? I marked off this inverted head and shoulders that we've got going on. And I've been telling you guys that if and when this neckline is broken, right, I would have liked to see a little bit more downside last week, maybe down to the 95 zone, maybe grab a little bit more liquidity based on this trend line, break this trend line a little bit, but we didn't get that liquidity. But ultimately, our long-term outlook of the dollar index seems to be looking like it's getting fulfilled. And you guys can see right here with this blue box that this is pretty much what I'm expecting price to happen. Do I think it's going to make it all the way up to 100.5? If we break this neckline, most likely. All right, most likely that makes the most amount of sense right now. And that's the next most significant level. What we can also do is if we remove this head and shoulders and we go ahead and fib out our previous swing, we can see kind of some key levels to work with. So we are going to be coming up to the 61.8% retracement level very soon. So I'm very interested to see what happens when we break this neckline, because that's also going to be a major level of resistance. You guys know the 61.8% is definitely a key level when we're talking about Fibonacci in the charts. But ultimately, if we can get some conviction above the 61.8%, we're going to move all the way up to the 100.5 level is what I believe. So that's my outlook. I'm bullish on the dollar to at least start off this week. If you guys are in my private group where I'm doing my webinar every single Monday, Tuesday, Wednesday, and Thursday for you guys, then that can obviously change. So take that with a grain of salt, that if you guys are just in here for the free weekly outlook, that this is my weekly outlook, right? We can kind of like last week, right? Last week on the weekly outlook, I said I was expecting some short-term downside on the dollar, but ultimately bullish on the dollar, right? If you guys were on my weekly outlook, go look at my playlists, my replays. You can go and see that from last week. That's truthfully exactly what I said. That's what we saw happen, right? It didn't move down as much as we wanted, but it still moved down. And if you were on the daily webinars, we went with some updates throughout the week. But anyways, expecting bullish moves on the dollar. So what does that mean for gold, right? Well, let's just take a look at this at gold for a moment, guys. Like, look at this. It is showing very clear signs of falling to the downside right now. So that's one thing I want to talk about too, is I'm never really looking at marrying my bias. If I can see blatantly, if the facts are there that what I'm wanting to happen isn't happening, because you have to understand that don't expect every single setup that I look at, guys, and every single price target that I have to come true, right? You're kind of lying to you. Not kind of. You are lying to yourself, and you're being delusional if you think that every single setup is going to go 100% all the time, right? So what I mean by that is, I told you guys I was expecting gold to move up to 1265. It looks like it's not ready to go there, right? It clearly is showing very bearish pressure on this pair. We found a reversal around the 38.2% retracement level. It got very close to 1250, and now it's headed back down. So you can see on the weekly candle that this is very, very clear bearish signs on gold. So I would be looking early on this week to looking, if you're trading gold, it's probably going to move back down to the bottom of this range, back down to the bottom of this previous range from September and early October. So we're probably looking at gold moving down towards 1190, 1185 this week, okay? What does that mean for Euro USD? Well, guys, if you're in my signals group, we're already in a trade on Euro USD. I'm not, obviously, it's reserved for my private members. I'm not going to give out the trade, unfortunately. I'll try to lead you guys to seeing what I'm looking at. But I think by now, if I've given you a clear idea of what I'm expecting with on gold and dollar index, you should already know what direction I'm trading on Euro USD. So the most logical thing at this point, I mean, it's very, very bearish. Exact opposite of the dollar index, and it looks like if this support breaks, right? Let's look at this on a higher time frame, right? What do we have on the weekly time frame? There's literally between 113 and all the way back down to a full retracement. There's not a whole lot of support if you look to the left, right? If you look to the left over here, there's no real major levels. So this pair definitely has the opportunity to melt. And it may not, right? A very probable scenario, and I wish I had my marker right now so I could draw. Oh, I can actually do this, guys. I can draw this. A very probable scenario is that we see price go down and just barely break this support, and then price spike all the way back up. And what that's going to do is, when that happens, that's going to create the liquidity, or what we call the accumulation, for market makers to be able to have the liquidity that they need to move price higher, right? Because what's happening right now is there's definitely some people selling, but there's going to be a lot more people selling once the 113.02, once the yearly low is broken. That's a lot of people are going to have sell stops in orders right below the support and expect price to go much lower. All right, so that's why we use good risk management, because even though we are confident on this trade and price action looks good, it doesn't always go our way. So we use good risk management. We try to get the trade to break even as soon as possible, and we just use good intuition. And the biggest thing is, guys, is we don't marry a bias. We be truthful with ourselves, and we be logical about what's happening on the charts. Okay, USD Swiss franc. Not interested in trading. It's really finding some conviction above parity. So looks like we're going to see some upside on this pair this week. Pound dollar and pound yen, I'm really not interested in either of these trades. So Gisa, I do apologize. I know you're interested in my short-term outlook. Most likely, Gisa, we're going to see downside to this support. Okay, we can probably see some short-term downside over the next couple days, maybe this whole week to downside on the pound. It would make a lot of sense, especially if the dollar really finds that conviction and strengthens. And we can also see, look at the weekly candle from last week, guys, right? We once again tested this level of resistance and made a very big exhaustion candle, even gapped a little bit down this week. So there's a lot of conviction to the downside, okay? Pound yen, kind of similar, right? Looks very similar to pound dollar. But both of these pairs have been ranging for the past couple weeks and just pretty volatile, especially these 2 weeks, right? Just major fake outs and manipulation in the market. Dollar yen looks bullish, right? I mean, dollar yen is back at a major level. It's back from if you guys have been following me on trading or been in the group since last year, around around between April or March of last year to December, January of this year, we had talked about this being a major level of resistance for me. And if we break this level, we could be flying super high on this pair, guys, okay? I also just want to say, guys, if you hear everything that I'm talking about with my premium group, if you're interested in learning more, shoot me a message on social media, guys. I'll send you some details on it. You can visit my website too. It's positivetraders.us, but we're obviously running some specials right now because our entire business model and pricing is changing. So really what you see on the website isn't valid. So shoot me a message. AUD USD. Okay, let's look at this pair. I had a lot of conviction to the upside. If you guys have been following me for a while, and you can even fact check me, right? If for some of you guys that are new and people that want to be haters, they want to say that maybe I could have just drawn these lines right here, drawn these arrows, but you guys know, you real ones know that, and if you've been here for my outlooks, you know that I drew this on a previous outlook a few weeks ago. And I said that this was the most likely scenario for AUD USD. AUD USD, the Australian dollar in particular, was extremely oversold, okay? And we saw a very strong, if you guys are familiar with the Wyckoff pattern, okay, we saw a very strong area of accumulation in here, or just another word for consolidation, or banks picking up orders and accumulating orders. And then we saw this right here on October 26th. We saw price, well, October 25th, I guess, depending on where some of you guys are. And we saw, this is called the spring. This is where price breaks a major level of support and induces a lot of sellers, and that way market makers are able to grab the liquidity that they need for the true move to the upside. And we did see price move back up, and I said price, and I drew these lines when price was literally right here. I said price is probably going to come back down to this area and then move up higher. That's exactly what we're seeing happen. We saw it break out. Now I want to be very, very clear with you guys, okay? Understand that this trend line does not determine the trend being broken. What really truly determines the trend being broken is where my cursor is right here. You see this right here? This is the most recent. I'm not talking about what happened on Friday, guys. I'm talking about the most recent lower high. Okay, and if you know just basic market structure, what creates a downtrend is lower lows and lower highs. Super basics, right? This was our most recent lower high, okay? So for this to be considered a trend reversal, and I posted this inside of Telegram for you guys all to see. I even posted a screenshot of this. I said that we need to have conviction above this level. And that way we create higher highs and higher lows. We still have not made a higher high. If anything, we've made a double top, or even to technically, if you want to count pips, guys, and you want to get to the pip and nitty gritty, this higher or this lower high that we made last week is still technically a little bit lower than this lower high right here. Okay, so this bearish trend is still very much intact. Let me be very clear with that, guys, okay? So don't just look at my trend line and be, oh, it broke the trend line, so it's going to go all the way up, okay? I posted a couple different scenarios that I do think AUD USD has the potential to move towards 74.50, but again, if you look at when I drew these lines, or if you were on my daily webinar, I drew these lines long before the end of the week closed, okay? A solid almost 24 hours or more, 24 to 48 hours before the markets closed. So price action was still created, and what I'm trying to emphasize, guys, is not marrying your bias, okay? It's okay to be wrong. If you plan on having long-term success with Forex, you need to kind of have that mindset and have that understanding and have that paradigm shift that you understand that it's okay to be wrong. It's okay, guys. It's okay. You don't have to be right all of the time. And just because I'm wrong a couple of the times doesn't make me a terrible trader. Okay? Long term, I know I'm profitable. All right? And I prove it. I have a track record to prove it. AUD USD. So what does this mean, right? If I'm bearish on Euro USD this week, bullish on the dollar, most likely we're going to see some downside pressure on AUD USD. On last week's webinar, when price was actually all the way up here on this bear flag, I said the most logical level, next level of support, we're probably going to move much lower than this, is going to be the 71.85 area, which is not just the lows of this consolidation or this accumulation before we moved up higher, but it also matches up with the 50 EMA. So if you guys don't know what this moving average is on my chart, it is the 50 exponential moving average. Most likely we're going to go lower than that. Most likely we're going to go definitely to the underside of this trend line, and then we'll see what happens. We'll reevaluate price action in this trend line. If we get a bounce off that trend line and we do see the dollar start to weaken, and we do see maybe the dollar doesn't completely melt, and I'm sorry, if we do see the dollar start to strengthen, I'm sorry. If we see the dollar start to weaken and Euro USD start to strengthen, when we get around the underside of this, or the top side of this previous resistance, now support, then we'll see what happens. We might find a buy in this area. We might break this zone and move much lower, right? So that's what I am looking for. I'm looking at right now, but short-term downside on both those pairs. NZD, USD, same thing. I think we could see some short-term downside on this pair this week, but I'm really not liking either of these setups as much as I'm liking Euro USD right now. But everything's going as planned. Now, NZD, USD, on the other hand, this pair, the Kiwi, it has actually broken the previous lower highs. Okay, we can see a lower high here, and we can see a lower high that was created right here before ultimately, where some people may have expected lower lows to be created. We saw a little bit of accumulation. We saw the Wyckoff method, where we saw literally right here, same thing like AUD USD, right here where price moves lower, and the spring, and we saw price move up higher, right? These were the two. If you guys were on last week's webinar, I said AUD USD and NZD USD were the best. I looked at all 7 of these pairs last week, but I said these are the 2 best pairs to trade. All right, and that's what came true. We saw a bullish run on both of these last week. Okay, so that's another thing, guys. Just to be really clear, like, your bias can change from week to week. It can change from day to day. It depends on price action and what's happening. Okay. NZD JPY, this has been another trade that's worked out very nicely. I talked about this quadruple bottom or triple bottom, whatever you want to call it, on last week's webinar when price was all the way down here. And I said the most likely scenario with this pair was moving up higher. Now, what do I think for this week? I'm actually not interested in trading this pair. I just kind of wanted to toot my own horn and show you guys that we're accurate, okay? None of these pairs. USD CAD. I will look at USD CAD because I do think USD CAD has some potential, okay? USD CAD, I know my chart can be confusing to some of you guys, right? But let me just straight up just drop the sauce, right? I've been bullish on USD CAD since all the way down here, right? Since September 14th, that's literally 2 months, guys. Our October passed, and now we're in November. For 2 months, this bias has been intact, right? I said that this is a buy zone for USD CAD, and if you guys have been following me, I said long-term 134 is my target for USD CAD, and let's see what's happened. It's gotten a little wild in here, but ultimately went down to our buy zone, and boom, it's moving up, okay? Lots of potential on this pair. Also, for some of you guys that are watching for the first time, I see that there's a lot of viewers in here. I don't know if you guys have seen this before, but let me just show you guys this. Here's this accuracy. Look at this with the Euro USD. Again, 2 months ago, guys, September 14th is when I posted this. Okay, I posted this completely for free, publicly. You can go on my trading view and see it. I said we were going to see some upside on Euro USD. Didn't quite get as high as we wanted, but that's okay. It still did the general idea of moving to the upside that we wanted, and then moved all the way back down. Okay? And then let's look at the dollar index real quick. Where was it? Right here. Possible price action for dollar index. Right? I said we were going to see some downside and then move up. This was 2 months ago, guys, September 14th. Okay? So, maybe you guys can, hopefully some of you guys that are maybe struggling in the markets can take some clues from this. And maybe you guys can see that maybe you're focusing too much on what's happening on the 1 minute time frame or the 5 minute time frame or the 15-minute time frame, and you're getting too emotional with your trades and you're jumping in and out of too many trades. Guys, over trading is a very real thing, guys. I admit to doing it sometimes too. Last month is a great example. At one point we were up almost 7% on our accounts for the month, right? And then we had and rather than stopping and trading there, I took some trades, we had some losses, and we ended up closing last month off at just about 1% gain, or right around a break-even month, which isn't bad, right? We didn't lose any money, so there's nothing bad to say about that, but we didn't gain as much as we were. Our equity curve was much higher last month, so. But it's okay. We come back, guys. I mean, it's not even coming back. I don't even know why I'm saying that. It's not like we lost any money. So we are good to go. But yeah, USD CAD, guys, just of what I'm saying is bullish. I'm expecting it to go to 134. Is it going to go to 134 straight away? Can you just buy here and it just shoots up 200 pips? Absolutely not, right? You're a fool if you do that. Okay? I mean, I'm not saying, and take that with a grain of salt, guys. Like, if your risk to reward is good and you can buy this pair and it makes sense to you, do it. But what the whole point of what I just said is that don't just expect it to go straight up without pullbacks like we've seen multiple times. Okay, it could go straight up to 134, And it most likely will like head right up to 134 without going much lower. But we're probably going to see pullbacks in waves on the way up. That's just the way the market moves. Corrections are healthy for price to reach, break to higher highs or to break lower lows, depending on the trend. Okay. Crypto, stay away from, guys. I mean, I don't ever recommend day trading crypto. The only reason some of you guys see, or that you guys see Bitcoin and Ethereum on here, is because, well, I like to just be educated and see what's going on, and I'm still expecting another bear run in the crypto market. But long term, I am bullish, guys. I do believe Bitcoin will go back to its every coin. Every coin that's not a shit coin will go back to their all-time highs and then break their all-time highs at some point. Okay. Do I think it's going to happen next month? Probably not. Okay. Do I think it's going to happen in the next 5 years? Yes. All right. So that's what I mean. From a long-term standpoint, I hold crypto. I accumulate crypto at these lows. I continue to accumulate it as price goes lower, and I keep it in a hardware wallet. I don't even think about it. I don't look at it. Okay. I don't day trade it. It's too volatile. Okay. For my liking, right? I'm talking about my taste, my opinions, guys. Okay. It's okay to have your own opinions. Euro AUD. Following perfectly through. Now, I'm actually going to unmark this pair because I'm not interested in trading it, but I will just kind of give myself credit where credit is due. I said last week that Euro AUD, when price was still playing around this trend line, you can kind of see it on a higher perspective that we were expecting. I said I was expecting downside on this pair. And if we see the Euro kind of pick up some weakness, like I think we are, this pair is probably going to continue moving lower. I will look for an entry on a pullback, but as of right now, I'm not super interested in trading it. Euro NZD, both of these pairs move together, right? So Euro AUD and Euro NZD have a very strong positive correlation to each other. And it makes sense because the Australia, New Zealand's economies are very similar. I talk about that all the time, okay? By the way, guys, if you have any actual questions that you want me to answer or any comments or anything like that, start putting those in the chat right now because we are getting to the end of this outlook. Euro GBP, I just want you guys to be very, just understand, be very vigilant of what's going on with Euro GBP. It's at a major weekly level of support that we've been seeing support since around a little bit earlier than this time last year. And it had also been, if you actually stretch this all the way back, it had also been a previous resistance for a couple times in 2016, right? We had a big fake out in October of 2016, but for the most part, this was a pretty significant level of resistance. And it also just happens to be the 23.6% retracement of this major swing from June 2015 to September of 2017. So over a 2-year trend, 2-year uptrend, this is the retracement of that. So what am I trying to insinuate? Well, I'm not really interested in entering this trade yet. But I do believe that if we can get some conviction below the support, we're going to move to our next level of logical support, which is not only the 38.2% retracement level that you can see right here, but it's also a major level of just price action support where we've seen support in the past. I also just kind of want to see real quick what we retrace to. So you guys notice how price right here retrace on this tiny little swing when we started to kind of move down a little bit, and then we had a little bit of a correction. We reversed around the 61.8% retracement level, and then let's see if this adds up. I like to look at some of the extension levels, guys. If you don't know what some of you guys might notice that this is new. I usually only have the 161.8 and then lower or higher extension levels, not usually the 127.2, but I've been doing some ABCD trading, and that is something that is relative to ABCD theory, and so disregard that, but 61.8% retracement level, even the 127.2 is very valid, so somewhere in there we're going to see price fall to, I believe. And the rest of the charts, that's it. I'm unchecking Swiss franc yen. I'm not interested in Swiss franc yen anymore. I'll quickly look at it. Oh yeah, so this is a swing trade that we were in, guys. So this is a swing trade that we placed in the group last week. We actually closed at these highs. I decided to close this trade just because of the volatility. So this is what we locked in some profits in last week, but we were risking 98 pips to make 783 pips. So just an example of a swing trade. Granted that we closed it early because there is very good reason to, and we ended up making some nice profits on this because we can see ultimately we closed all the way up here, and we can see ultimately that price moved lower. I'll tell you guys just from a lower time perspective, which is one thing that I look at when I am analyzing trades. is we saw a little bit of a triple top at these highs, right? We saw price struggling to move up higher in this area, and I used my trader's intuition to close our trade out, locked in some nice profits, and it ended up moving lower. Do I think that this pair will still move higher and could move higher? Yes, but I need it, for me to even consider re-entering this trade, I would need it to break out of this current resistance zone. So I'll actually delete that right there, and just so you guys can see this resistance zone, I need it to break above the 50 EMA, the previous highs from last week. I'd really need some conviction above that area. So you know what? I will keep this marked on the chart just so I at least am watching it. But guys, if you're in my signals group, we already have a trade running. There's going to probably be plenty more trades this week, as there generally always is. But other than that, guys, that is the webinar for today. So I appreciate you guys. I appreciate everybody on here. Make sure you are subscribed, and make sure you hit the little bell so you get notifications when I go live. And other than that, guys, if you are a premium member, or one of my students, I will see you guys tomorrow on the daily webinar, daily live trading webinar. And if you are not, I will see you on the weekly outlook next week. Keep in mind, guys, that my lifetime membership is closing. There's only a few more spots for the lifetime membership before I change my pricing, but I have an entire course coming out, guys, and it's been 2.5 years that I've been running my business without any sort of real education or real course, and it's time for me to release something. I've proven my worth, I've proven my credibility, and this course is going to be so valuable, guys. I am so excited for you guys to see it, because a lot of these Forex educators online are literally just selling fluff. They're basically bundling up how to use support and resistance in some long, drawn-out thing, and they aren't teaching you any of the real stuff like manipulation, understanding bank orders and order blocks and supply and demand, and in the real thing that moves the market, guys, which is manipulation and banks and market makers. Not, support and resistance is great. Obviously, I go over that. I go over the basics in my course as well, but a majority of my course is focusing on, really understanding the markets and really